The other one, in terms of social housing, 30,000 houses over the next 4 years. That's a big slab of what we build each year. I mean, we do 170, 180,000 houses a year Australia is currently capable of building. Where's the money coming from that? How much are they going to cost to build? Where's the labour to build it? And if I were a betting man, which I'm not, but I'd say the prospect of having 30,000 new socially driven housing properties coming to the market in the next couple of years, it's going to be a miss. It's not going to happen.
5 years. It's not, that's a decent time.
Well, we talked, I'm sure it was this year, it might have even been last year now, all sort of blurs, isn't it? On the government scheme for building new homes, affordable housing scheme, nothing's happened with that. There's not been one house that's been built so far from the tens of millions of dollars that have been outlaid on consultants and contractors and website design and all that sort of stuff. So, seeing new supply coming into the market, which I'm sure we'll get onto shortly, is a crucial thing that needs to happen, yet government policy seems to be stymieing that at every which way you can have. Hey guys, welcome to this week's Money and Investing Show. This week we are looking at property. It's everyone's favourite topic, it's a national obsession, and some interesting things as we dive a little bit deeper in terms of the drivers for the market, where we see some potential weaknesses, where we see opportunities, most importantly, how you can be investing well. See you in the show. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitchell Olarenshaw.
Good to be here, Mr. B. Now, I'm pretty keen on this episode because this is a growing interest of my own, particularly for investment purposes, as I know many of our clients out there too. And that's the property market in Australia. We're not just stock market or economics, we're all seasons. So let's talk about the outlook for 2025.
It's a tricky one, isn't it? The crystal ball. I'll get the tea leaves out.
Yeah, just got it down here. Here you go.
Yeah.
So
Look, I think there's always a strong case for property, which is based on the scarcity of supply, which I'm sure we'll get into. Equally, on the demand side, we've got affordability issues. You've got a cost of living crisis too, and you've got persistent higher interest rates making it harder for people. So there is a yin and a yang to this. So let's look at both sides of the coin, and we'll leave it to our educated clients, listeners and viewers to piece the puzzle together and work out whether we're bullish or bearish.
Great stuff. Okay, first things first, let's talk about some economics because that will drive ultimately the property market in a large degree. So if we think about inflation and interest rates, so 2025, at the moment, interest rates have been relatively high for quite some time now. They're expected to potentially start to be cut throughout the middle parts of this year. What kind of impact could that have?
I think lower interest rates most certainly helps affordability of property, also reduces the financial stress on many households that are struggling to deal with a mortgage. It's maybe 2 or 2.5 times what it was 3 years ago. And that is a major challenge for our economy, is that disposable income in the household after you've paid your mortgage. So, I think we're going to see interest rate cuts this year. How quickly they come, I don't think it's going to be quite as soon as people are expecting. I don't think in the first quarter at the minimum. I think we're likely to see it in the second quarter.
Yeah.
But also how forthcoming those interest rate cuts are going to be will really come down a lot to what the government's policy is in terms of some of the cash handouts, given the fact that it's an election year that we can expect to see to sweeten the voting base. So if we see a fair amount of reckless spending, I think there's a potential that we might not see interest rates cut anywhere near what people might be expecting.
That's the thing, right? It's going to be dictated by inflation, which, look, is on a really good glide path at the moment towards the downside, which is great. Yeah. But it's not quite there yet. There's still a bit of work to do.
No, and inflation's an interesting one because during inflation, real assets move up in value. Property is a real asset, so during times of inflation, you expect to see property move higher. The other area, which is a bit of a headspin for people, is that if you owe money, i.e. you have a mortgage, high inflation is actually, if you can afford to service the debt, a pretty good thing, because let's say you owe $1 million and you're on an interest-only loan and you've got 10 years to pay it back. If inflation's running at 7% and remains up around that for that 10-year period, the $1 million you owe in 10 years' time is actually discounted significantly in real money terms because of the inflation rate chewing away at its present value. I know there's a lot to unpack.
There's a time value of money here. This is
exactly right. So high inflation is actually great for debt because what you're actually paying back is much less in real terms than what it might seem like today.
Interesting. What about wage growth, AB, as another major economic indicator?
Yeah, look, we've had wage growth in certain areas have been quite patchy. We've had a lot of people that have also struggled with fairly anemic pay rises. I'm minded of Qantas, for example, which I think their cabin crew were on, I think it was 17% over 3 or 4 years, which is relatively low when you consider where the cost of living has been, leaving them effectively further and further behind. The other side of the coin, there have been sectors and industries that have done insanely well. Tradies, of course, being one, where we've got a skills shortage, and they've been much maligned in the media, being the traders are the new doctors. It's an obscene amount they're earning. And traders pulling down $180,000 to $200,000 a year now, which is a decent lick of cash. That said, when you're in a situation where you've got supply and demand, if you're someone that's got the skill and no one else does, it's an auction system as to whether or not you're going to be employed and what you're going to be employed at. So that's worked out pretty well. But some of the numbers you're seeing, I saw some figures for people operating a stop-go sign. I got a buddy of mine runs a huge road traffic company. And people operating the lollipop, the stop-go, 120, 130 grand a year for what is
Not bad.
Pretty low-skilled job. That's kind of crazy when you consider what nurses and teachers earn that have been to university and are providing a different level of service within the community. And I appreciate road safety is very, very important, but it does seem like there's something of a mismatch, if you will, between price and value there.
I would agree. I think you might be being paid there for the boredom of standing on the road.
Yeah, my sister-in-law's a nurse, and she works really hard, and she has done, for the last 15 years that she's been in nursing. She went to university to get a bachelor's degree. She's dedicated her life to helping people, and her income is a fraction of that. And the responsibilities she has for things like vaccinations or inoculations or providing medicines and the duty of care, there's an awful lot of responsibility goes with that.
Totally.
And you get paid not what you should be.
Absolutely. Let's move forwards now. Let's talk about regional versus more urban areas of the property market. Now, we know there's always going to be a difference in terms of pricing and affordability. What's your outlook in either area, AB?
Well, the regions have been really good. I mean, I live in a regional part of Australia, being Byron Bay, which is
farmer,
which is
off the grid,
gentleman farmer, not quite off the grid, but working on it. And that whole area has been insane in terms of price gain.
It has, hasn't it?
And has been relatively stable. COVID was good for it, and then subsequently people have stayed up. So it's been a tightly held kind of market. So things have gone well there. Other areas less so. Got a lot of new stock coming on. If you look at the Sydney apartment market, for example, where there's a ton of new stock coming through, buyer demand or ability to service debt has probably restricted people to an extent of going into those markets. And look, if you're a seasoned investor, buying an off-the-plan high-rise is probably not the game plan in Sydney in terms of optimising your investment returns. So you haven't had that driver of investment buyers going in and pushing it. So it's been a little bit patchy. You've seen clearance rates slow down a little bit too. That is largely to do with affordability and being able to service debt, obviously. But there have been some signs that you go, okay, it looks like we're going to have a little bit of a pullback based on what's been going on, and that's both in the city and also in the regions. It's been almost a similar pattern where there's been some level of weakness. That said, there are certain geographical regions which continue to hold value, and most likely always will, because let's face it, we're talking about real estate, and the most important factor in that is location, followed by location. So
location.
Got good stock in the right place, it's always going to hold its value.
That's right. Let's transition now to talking about government policy, because we know that has a very, very large impact, and I guess probably not having the largest impact that it probably could have. Stamp duty reforms is one that comes to my mind.
Yep.
Now, the challenge we've got is that pretty much every single state is on a different path. So SA Victoria, pretty sure, are looking at land tax versus stamp duty.
Yep.
Queensland are trying to increase the concession, whereas in WA they're trying to abolish stamp duty altogether for first-time buyers.
Well, Queensland are also trying to do a universal land tax too. If you own property anywhere in Australia, you potentially... So it is very much...
All over the show, right?
And look... Welcome to the country of Australia, where it's totally fragmented by state. I'm not a fan of state government. I'm not a fan of statewide policy either. We live in a country, and it should be largely universal in what we do. And it does make it difficult if you're a property investor, because you might want to diversify out of the town or state that you live in and hold assets elsewhere to help adjust your risk profile of your portfolio. And if you're dealing with different levels of taxation, it makes it enormously tricky. I think South Australia traditionally has been the highest state in Australia for stamp duty, which starves the state of investment. Yet you've got a state which has its fair share of migrants moving toward it, and you need to have that supply-demand balance restored. You can't go, we'll take people to come and live here, but we're going to make it prohibitive for people not own property because of the stamp duty. It just makes no sense. So, yeah, not a fan, and I'm not a fan when governments sort of go, okay, what can we do to change this and make it worse for people?
It's kind of a sad thing, isn't it? I mean, I've bought a few properties in my time, and it's always great when you save up the deposit, then you realise you need an extra 50 grand just to cover your stamp duty and expenses, and you think, for most people that is prohibitively expensive. It
is, and don't forget, I mean, you have stamp duty on cars too. So, I mean, it is an archaic tax. And New South Wales have looked at doing an opportunity shift whereby you pay an amount each year rather than on the property transfer, and you can nominate that this is a property where you pay a stamp fee each year, a small amount, to avoid that big upfront chunky fee that you have to pay, as you rightly say, when you buy. And that can make an enormous difference to your buying ability, because if you've taken, you used the figure of 50,000. If you've taken that 50 grand to pay stamp and that's not going into your deposit, if it's an investment property, that 50 grand, what's that, 20% on that, it starts to become quite material in terms of that's $250,000 of buying capacity or borrowing capacity that you've missed in order to pay stamp duty. It's material.
Totally. What about, say, for example, some of the affordability schemes? So, two that spring to my mind would be the rental assistance package, which had a 10% increase last year, or is expected to increase by 10% this year in 2025. Then you've got the social housing scheme, which they're planning on building 30,000 new dwellings over 5 years. Are they working? Will they have an impact on house prices this year? What do you think?
Look, without sounding like an anarchist, with the scariest expression you can ever hear is we're from the government, we're here to help.
Yeah, no.
And very seldom does government policy that interferes in a market have a positive outcome. So starting with rental assistance, if you offer a subsidy for rent, guess what happens to rent?
It just goes higher.
It goes higher, which is inflationary in the first instance, and net, you're effectively transferring that government dollar to the landlord's pocket. Not really the outcome the government are looking for. It sounds good on paper, probably a vote winner too, and you think, oh yeah, I'll have a crack at that. But in reality, probably has the opposite outcome to that which it's designed to do. And that's not unusual for government policy. The other one, in terms of social housing, 30,000 houses over the next 4 years. That's a big slab of what we build each year. I mean, we do 170, 180,000 houses a year Australia is currently capable of building. Where's the money coming from that? How much are they going to cost to build? Where's the labour to build it? And if I were a betting man, which I'm not, but I'd say the prospect of having 30,000 new socially driven housing properties coming to the market in the next couple of years, it's going to be a miss. It's not going to happen.
5 years. It's not, that's a decent time.
Well, we talked, well, I'm sure it was this year, it might have even been last year, all sort of blurs, isn't it? On the government scheme for building new homes, affordable housing scheme. Nothing's happened with that. There's not been one house that's been built so far from the tens of millions of dollars that have been outlaid on consultants and contractors and website design and all that sort of stuff. So, seeing new supply coming into the market, which I'm sure we'll get onto shortly, is a crucial thing that needs to happen, yet government policy seems to be stymieing that at every which way you can have.
So what about the Help to Buy scheme? So there's 40,000 of these available where the Commonwealth covers a decent chunk of the purchase price. So the government part owns your house, really. What kind of impact, positive or negative, would we expect from that?
I don't see it having a largely positive impact. Again, government policy tends not to do that, and I appreciate that sounds quite cynical, but if you're getting backstopped by the government and making it more affordable for you to actually buy somewhere to live, there are a couple of factors at play which we'll get into in just a moment, but basically you go again nudging prices slightly higher. Secondly, owning a house, it's the great Australian dream, and for some people, unfortunately, it is only a dream, it's not the reality, because they haven't built the muscle memory, the finance skills to get themselves a seat at the table. I mean, I've got that book here, The Wealth Playbook, and we talk extensively about building good habits, how to save, how to budget, how to make sure you continue to grow that nest egg, and so you get yourself in a position where you can buy a property. If you don't demonstrate any of those skills, you're unable to save a deposit, how are you going to pay your mortgage?
You can't.
And these are just qualifiers. So if you've worked on how to save, you build a deposit, you buy a house. But that saving habit that you've built is what goes towards servicing your mortgage. You've built the muscle memory or the skill set that can ensure that not only can you get into a house, but it's something you can also keep. And that's really, really important to understand, because if you've got a government's sort of crutch to lean on to get in, once you're in, what happens then? In terms of, well, what if you don't have good financial behavior and you lose your house? What happens then?
Yep.
And they sound really cynical comments, but owning a house is in an area you want to own one is not your right. You've got to earn the ability to have that. I had friends down at the weekend who are in Sydney, and it's just not fair for the kids. They can't afford to buy. Well, they can. They've both got really good jobs. They can afford to buy, just not where they want to buy. And that's a big difference, and we've talked about that extensively. And you've done this firsthand with starting your investment portfolio of properties. You bought strategically the first time where you could afford. Second time was where you wanted to live. Third one is probably one of the better upside potential areas that you're going to look at. And properties 1 and 3 for you, and I'm maybe speaking out of turn when I say this, are not places you want to live.
Not at all.
But the numbers worked out to make the deal happen to ensure that it was the right thing for you.
That's right.
So just wanting to live somewhere doesn't give you the right to say, I want to live here. And I see this firsthand where I am in Byron Bay. It is a cost-prohibitive place to live. It's a very expensive place to rent. And there's talk that, the locals are priced out of the market. No, they're not. If they're local, they already own a property there. So they've probably done very, very well and made several $1 million, because the average price of a property there is nearly $3 million. So, they've done really well. It's harder for people to rent there, but if you're renting, it's your choice. You could live in other places that are much cheaper, but if you want to live there, it's going to cost you a premium. It's not your right to live there.
That's right. Best piece of advice for any first home buyers out there, just live at home and save. Don't move out of home until you bought something.
You played your parents like a piano. I think they needed a tire iron to get you out eventually.
They charged me a decent amount of board. I can tell you, it was above
nonsense.
market. I can say
your mother you'd have had so many rent rebates over that period of time.
I can say I got looked after.
The golden son.
That's right.
But it's sage advice. Stay at home as long as you can to accumulate the deposit to get in there. But you've got to demonstrate that savings ability, and that's why banks like to see a deposit. And when the bank of mum and dad throw some coin in your account to help you buy it, it seems on the surface you might be doing you a favour, but in fact you're probably not. You're wallpapering over some cracks of behaviour.
That's right.
I'll stop.
That's right. Let's talk about population growth. AB. That's a huge factor, because, as you made mention at the very start, the whole notion of property is that it's scarce, right? So we look at population growth. They estimate in 2025 there's going to be around about 200,000 undersupply of new homes to facilitate the new population. 80% of our population growth last year in 2024 came from overseas migration, which they're expecting the same trend to continue. So we're expecting a lot more people to move to Australia.
More people moving in need more places to live, and the real choke point we have sits in that building capacity. So this year I think we've built something like 100, I'm out by 10 or 20,000 units here, but the quantum is probably about right. So we've built about 170, 180,000 houses this year. To just maintain the status quo, we need at least 280,000 houses a year, and the government's goal is to have another 1.2 million homes available in the Australian economy, I think by 2030, 2029.
Yeah, thereabouts, yeah.
How and where are they going to be built? Who's going to build them? What materials are they going to use to do it? What land are they going to do it on? Because building approvals, so if you want to build a house, you've got to have a building approval. Building approvals for the year, ballpark, I think October we did about 15,000 nationwide building approvals, which is just grossing that up. That might have been a strong month, might have been a weaker month, but that's about 180,000 units a year, roughly, are approved to be built. And we built about 180,000 units. Where are the rest coming from? And there's a requirement to remove the red tape and expedite the process for building approvals if you want to have the ability to build more homes. You can't build them without approvals, simple as that. And that's something that's in the government's hands. Secondly, once you've got an approval, if you've got a market already where trades, a Sparky might be picking up 180, 200 grand a year, maybe less, probably is less in some instances, maybe more in others, because they're in demand and there aren't many competitors in that space. how many extra houses can that person already go to work and build on if they're already fully employed doing what they're doing? And what does it mean? It means the cost of acquiring a sparky or a trade to do that job is a bidding system. And if you want it, you're going to pay more, you're going to get it done, which causes more cost for building per square metre, making it less and less affordable for people. So you have to turn on the supply of new builds, more housing approvals for sure, but we need skills to be able to build these places too, and we don't. We have a chronic shortage of trades, and it's just a flywheel of problem that's spinning around. So, are we going to hit 1.2 million houses by 2030? I'd take any size trade that's not going to be happening because it's government backed for a start, and structurally our property sector needs some major work in terms of new talent coming in, people that are skilled, people that are qualified. There's a lead time for building that up, and they're just not existing right now.
And I think that's, as we come to the end of our broadcast, too, out of a few challenges that we can talk about, AB, you think about labour shortages at the moment, and then also construction. It's a really tough game because labour is really expensive to build new homes, as you say, or renovate or construct, whatever it is. And then the materials are costing a fortune too. How do you actually do it? How do you get around it?
It's a crazy notion. I mean, I'm just in the middle of a project at the moment, and that I think it's going to sit at about $8,000 a square metre to build. Now, if you wind the clock back 5 years ago, that same build cost would have been probably about $3,500 to $4,000.
$8,000 a square metre. What are you building? Is it gold-plated titanium?
No, it's not.
I know it's nice,
but it's not like you're walking into Scarface's mansion kind of thing. You've got travertine everywhere, and that's the reality of what a build cost looks like for stuff these days. Certainly, I live regionally, so there's a premium in there. And if you look at different places, the building costs are different in different areas. If you're building on the Gold Coast, one of the most expensive places to build in Australia, believe it or not. Then again, look at the skyline, how many cranes are out there doing things too, and you've got to find that workforce. So, again, that supply and demand factor kicks in. And I think, specifically in that build cost is prohibitive, which then goes to restrict supply, which pushes the price of existing stock higher, which means if you've got a mortgage, you're paying more. Or if you're putting a tenant into rent, well, they're going to need to pay more if they're going to be in there to keep the yield up. I'm sure we'll get on and talk about yields in a few minutes' time in terms of some of the things from an outlook perspective.
Let's talk to it now. What is your view on yields? Because we do have interest rates potentially coming lower.
Yeah.
Then we've got undersupply.
Well, if I scratch through some numbers, so if you look at, say, the average price of a house in Australia is currently it's about $960,000. Okay.
That's average, really?
Yeah. And if you look at the rent, I'm going to take the average rent of Sydney, so it's above average, being Sydney, is about $750 a week. Okay. And we'll work this one through on a line-by-line basis. So if you have tenants, as you well know, your letting agent, and there's some negotiation room on here, typically going to charge you about 1 week's rent plus 7%, which is the typical formula. So I've got the numbers written down here, so I'm on point with this. Okay, so let me just grab this now. So that gives you about $39,000 a year in terms of what your gross rent coming in the door is. Now, to buy that 960 grand property, by the way, as an investment, you need $192,000 of deposit. So
plus your stamps and
plus
your
costs. Stamp and everything
so
else.
$250 we could probably round up to.
Yeah, which is a decent lick of cash to get there. You put your tenant in, $750 a week, 39 grand a year. Now, letting agent's about 3.5 grand, so 7% plus a week's about 3.5 grand for the year. If we then look at things like land tax and landlord insurance and a few of the sort of typical costs that you have to bear, you'd be lucky to, on a gross basis, be making about 30 grand.
If that.
Now, probably, I'm trying to be generous with these numbers because, I think, it's easy to bash this, but I'm trying to be very, very generous with these numbers. So that gives you a gross yield of about 3.1%. Now, remember, you borrowed 192 grand, which means you've also got a $768,000 mortgage to support. So you're probably going to have mortgage insurance or potentially to go with that, or maybe not. And if you think about that on an interest-only basis, that is, what does that work out to be? About $3,900 per month, which
interest
is
only.
Interest only. And that's picking a variable rate. And that works out to be, about $46,800 a year. Now, if your net rent is 30 grand and servicing the debt on that property is 47 grand, you're losing $17,000 a year to own that investment property.
Plus your rates and that kind of thing.
Yeah, and then you've got other outgoings.
Fixing stuff.
Yeah, fixing stuff, fair wear and tear, all the other things that can come out of the end of your smoke alarm report, your BMT depreciation report, everything that goes alongside this. I'm trying to be very generous with these numbers, right? So you're down 17 grand. That works if you want to negatively gear the property to get your tax down. Of course, government are sort of looking at that to maybe shut that loophole for people. So if you're someone that wants to invest money to get it to grow, doing that kind of transaction is based on one thing and one thing only, and that is you're expecting capital growth. Because it sure as hell isn't because of the yield that you're receiving on that. So you're now taking on a position where you're losing money today on the basis that you hope over the coming years, the property market continues to run higher in order for you to get some level of capital growth. Okay, that's the reality of what we're seeing. Now, if the yield's not enough, what do you want to do? You want to put the rent up, but you can't do that because most people are tapped out right now in terms of their ability to be able to service rent to live somewhere. You know, and $750 a week rent on that particular property, which is what the weekly average is in Sydney. What are you going to be earning to pay $750 a week in rent and still leave yourself in a position where you can afford food, electricity, you can use the train to get around, maybe every now and then buy yourself something.
Every now and then. You'd have to be earning $2,000 a week minimum.
Right.
Minimum.
So this is the challenge that's out there. I don't see an ability for landlords to be able to raise rent to get the yield up. And sure, there'll be some relief if we see interest rates come down a little bit lower, making it easier to service the debt. But the reality is not going to change the yield in any great shape or form for people. And an investment on a hard-nosed professional investing basis is all about yield, knowing what the numbers are. Because right now you might be able to earn 4.5% on cash at the bank, which is definitely better than what you're getting out of your investment property, but there's no growth in the cash at the bank. The growth is out of the potential capital growth in the property. Alternatively, put it in the stock market. And if we talk about the performance of the S&P this year is 27% for the year. Capital growth, not bad. And if you're in stocks that have got a yield, you might be picking up 4.5-5% yield on that, which makes it, in my mind, at this point in the cycle, probably a better play. And also you've got the ability to manage risk on there. Now, the big challenge we have is that we need more stock coming into the market. It's hard to do that when you've got a very limited workforce that can do it, and also an approval place or building approval process which is unable to turn the tap on to provide more housing starts. And even if you did turn the tap on, there's not the workforce to build them. So I think we're going to be struggling on the supply side in Australia, which will aggravate the situation. If you've got more people coming in, they need somewhere to live. That will ultimately push rents up, which perhaps makes this then a more compelling case. But 960 grand average house price, $750 a week average rent for Sydney, and that doesn't even give you anything like a positively geared property, which is terrifying.
That is crazy, isn't it? It's a sad reality of it, though. It's very, very expensive to buy and own property. It really is.
It is, and look, in 10 or 20 years' time, you probably look back and go, that was the best trade I ever did, as you see something moving up in value. And I guess it comes down to one core thing when it comes to investing, whether that's stocks, whether it's in the property market or anything else for that matter, you have to have time working for you. You have to get started. You have to let time do its thing. And if you hold an asset for long enough, as a particularly if it's property, some tricky times where you might see a little bit of weakness in price. You then see some good times. But overall, the property market, particularly in Australia, where supply has been limited, has been a long-term bullish case. And I don't think that case is particularly changing, but there are risks there. So the more we see the government stop interfering with it, other than to try and increase the supply of new property by having more trades, more colleges, more approvals for property to get more stuff going in the market, that's one way we're going to see things move along in the right way. Other than that, I think we're in for a very, very tough time. Interesting, AB. Thank you very much for the insight today. Cheers. My pleasure. Anytime, Mitch. There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to hosting you next week.